Yeah, the long was not really expected to me. I was really short bias on it today because look at the daily. It just made a huge move right there. So guys, do you want us to immediately start with the trade reviews or just talk about the market today and why I wanted to trade to the short side and why my day actually started so bad? Because those type of days, they'll be happening every now and then. I will not take a long time talking about this, maybe 5 minutes, 10 minutes maximum. Okay, that's good. We'll get back definitely to the trade review because this is a trade review session. But let's talk about the market quickly. So looking at the SPY, look at the daily chart on the SPY. Drop down, pull back, coming back down to the 50 moving average. So on the daily chart, we're having a reverse ABCD pattern. Looking at the SPY, I was literally short bias on it today. I knew it will drop down eventually. Not 100% sure that it's going to drop down, but I knew it has a short play in it. And I wanted to catch that downtrend. I thought it will be somewhere at the open, maybe a little bit later, but that didn't happen. It happened just around or after 11 a.m. Anyway, the daily chart was weak, and if you saw most of the stocks today, they were following the SPY. AMD, at least in the pre-market, AMD, Nvidia, Apple, most of the stocks which we are trading, they just were following the SPY. That was my watch list. And my watch list was also based on stocks which were following the SPY. Before the market open, you could see this. This is what we saw before the market open. And looking at this, I'm naturally short bias. Daily chart is weak. Pre-market is weak. All the resistance above. Am I going to take a trade to the long side? Not really. I'm not going to take it to the long side. Even if it's giving me a long setup, according to my rules, I should not trade it to the long side unless it's breaking all the resistance above it. Now that it's breaking this resistance and it's breaking this resistance and it has room above it, I could get interested in trading it to the long side. And if it's offering me a good setup, sort of an ABCD pattern. This is an ABCD pattern, which is extended from the 9 moving average in the 5 minute chart, but because of the 2 dojis, you don't need it to get closer to the 9 moving average on the 5 minute chart if you remember that webinar. Anyway, that was the only place where I should have started thinking about the SPY or the stocks which are following the SPY to the long side. Now, my mistake is that I traded a little bit earlier. I traded Apple. And you see how I was trying to force it to the short side at the open. Same thing, stock is really weak. On the daily chart, reverse ABCD pattern, and it's weaker than the SPY because on the daily chart it broke the support area. We have a lot of room to the downside. I don't want it to go all the way to 100, but I wanted to make the average true range, which is somewhere around $3 to the bottom side, at least $2 maybe. I'll be happy about it. So look at this, dropping down, pulling back to view up, pulling back to view up. I see that wick right there, that wick right there. It's getting back down. I take it to the short side with the stop up there. And once it's breaking, or if it broke that low down there, I would have added to my position and moved my stop loss somewhere to the middle of the range. Now that didn't happen and it just got me stopped out. Later on the day, this is what I told you guys. The only place where I'm interested in taking this thing to the long side is the moment it's getting above the resistance areas. I didn't take it to the long side here for one reason. We're having the 200 moving average on the 1 minute chart, and then we're having the 50 moving average on the 5 minute chart, which is a little bit above it. We might break the 200 but bounce off the 50, which is strong moving average. Then we're having the 20 moving average on the 15 minute chart, which is somewhere at 30, a little bit above it. Looking at that, I definitely don't like to just gamble on it and take it to the long side. I waited for it to break. It did break. After the break, I wait for it to pull back. Previous resistance acting as support. Still not sure about it. This might make a reverse ABCD pattern and then just dump down. And I waited for a W shape, taking it to the long side for the break. Once it's breaking, adding to my position and just taking a small scalp on it to the long side. Let me see quickly what else I had there. Some horrible trades, SPY. By the way, on the SPY, I lost 2 R's. It wasn't 1 R. I got slippage on it. Where is it? This is me trying to short the SPY. I told you I was really short biased on it. It's dropping down, double top. I'm not sure if this is a mountain pass. It could be a mountain pass, Peter's mountain pass, dropping down, and I anticipate a reverse ABCD pattern because of my bias to the short side, and my plan is to trade today only to the short side. I don't get myself chopped long short. This is the worst thing you could do to yourself. If you are biased to one direction in the market, then wait for a plan to your for a setup to your direction. It might not be a huge move, it could be just a scalp, but don't get chopped flipping your position from the long side to the short side, from the long side to the short side, which I kinda did on one of the trades. Anyway, taking it to the short side for the reverse ABCD pattern, adding for the break, fake breakdown, getting me stopped out, and I lost 2 Rs here. Unfortunately, I mismanaged my ad right there. Let's see what else I have traded. Actually, the rest of the trades are good. Deki and G, same thing, was short bias on it, trying to force it to the short side, getting me stopped out. Then I just go with the trend because we're above everything ABCD pattern, and then taking a parabolic reversal on it. And yeah, I know. Short side, stopped out, short side, no, work. Yeah, this was a 1 R loser, 1 R winner, taking it for the breakdown, getting stopped out, and then, oh my god, why didn't I hold on to this thing? Okay, that's FOMO now. Let's ignore my FOMO. And the last thing I traded was NVAX. Now there is one embarrassing trade, not one embarrassing trade, one embarrassing stock I have traded. And this is it. This is what you don't want to get yourself caught into. And this is my worst and most horrible trade today. You see how many Rs I made on all of those trades, on the trades which I shared with you. And what caused me to have only 6 Rs today is what I did here on AMD. I'm short biased on it. I'm taking it to the short side, below the wicks. It's going in my favor, going a little bit against me, and I exited break even. Panicking because the setup is not clear. Now that's bad. What should I have done here, guys? Or if you are taking AMD to the short side, what would you do in my case? Maybe with a stop loss? Let's get this a little bit up there and let me get back to YouTube. Hey Daniel, I would set my stop loss above the moving average. So yeah, not bad, not bad. You could set your stop loss above the moving average because every time it's bouncing outfit and closing below, right? Or you could just have safer and put it a little bit above there. But I agree with you, above the moving average is good. That would have been one entry to the short side, and then just hold on through this whole consolidation right here. Sorry about that, let me get back. Hold on through this whole consolidation and get stopped out on this candle. This candle would mean minus 1 R. What did I do? I'm taking it to the short side, my stop loss up there, and I decide to exit at break even, paying commissions here. It's making small double top. I'm getting it to the short side one more time. I see that it's sort of descending below this level. I'm adding to my position, and then I'm getting stopped out here for 1.5 R loser. So basically, instead of being at break even here, I lost 1.5 R on that trade. Now, I see that it's actually squeezing up. I see those wicks from the bottom. And I try to go in for the breakout. And I'm adding to my position for the breakout. And it is breaking out. But again, this price action here, or my bad trading there, it started getting me into a revenge trading psychology. That happens to everyone. I didn't have this one for a while. But if you have bad habit, revenge trading, over trading, no matter how good you think you are, or no matter how long you've not been doing it, there will be a day where that just clicks in and you will be doing that bad habit. And taking it to the long side, I know I'm doing a bad thing. I know this is breaking my rules. And I told you guys, when would I take a stock to the long side? I will take stock to the long side only if it breaks all the resistance areas, starts consolidating above it, and then giving me a setup to the long side. This is where I should have been interested in taking it to the long side, though there was no setup on it to the long side. So yeah, this would have been a winner, but this shouldn't have been taken at all. Because of that, I flipped my position to the short side. I'm short biased, double top, taking it to the short side and getting stopped out one more time. You see how horrible it is? Short, one trade. Short, stop at break even. Short, 1.5 R loser. Long, add, stopped at break even. Short, 1 R loser. And I paid a lot of commissions along with the losers right there. So this is what you don't want to do on a stock, just flipping your position. If you're short biased, wait for the short setup. If it's not giving you a short setup, wait for the long setup. If it's confirming you, if nothing is there, then just don't trade and wait later for the day, because later on the day I caught really nice setups. I caught a good short on INO, on which I'm having FOMO right now. I caught a good short on NVAX, which I mismanaged again, and this could have been a better winner. And DKNG, when the stock started getting cleaner, right, for a break of the high of the day. Apple, later, once it just started showing itself. You don't need to catch a trade on the very first minute or on the very first 5 minutes. If the market is choppy around this area, wait. There will be a lot of other opportunities right there. Whenever I have days like this, I just pretend that it never happened. I appreciate it. No, this happens to everyone. Like, I just want you to see that I see some members are doing this, and I bet not a lot are sharing these type of trades. Before, I used to have a lot of trades like this. Now they are so rare. This happens. I don't know. I don't really remember when the last time this happened, but this is what I was making my rules for. And this is why I'm reading the daily chart, the pre-market price action, so that I just don't flip my position long short, and instead of being -1 hour, I end up -3 or -4 hours, because eventually the pattern happened. The daily chart is so weak, right? And look at it, it's now selling off. Now the pattern is clean. Now you could just get on each reverse ABCD pattern to the downside partial at pivot points. Thank you, Chicago. It doesn't make me feel better, but yeah. Let's just... Oh my god, I'm so bad. Yeah, I'm so sad I exited all out there. I just wanted to exit all out here because of the trade review session. It's my bad. It's just starting to get the volume. Look at these guys. Where did I bring those levels from? If you look back on the 15-minute chart, this is it. The area which it had. And now that it broke this level and this level, the only pivot point it has, or the next pivot point it has, is somewhere around 1509. So I should have waited for the break of those areas and then just held it all the way down there. Once it's broke it, it's getting volume because there is a huge gap, a huge move to fill. For each stock, depending on the daily chart, and what I see in the pre-market and on the 15-minute chart. Each stock, I have an independent plan for it. But since everything was following the SPY, even INO, just look, everything. At the open, it went up, then it sold off. INO, Apple, AMD, I don't know what to have, NVIDIA, SQJ. Everything just shut up, and then it started dropping down. NVAX. Everything was today following the SPY, so mostly I was short biased. The short one, I know it was a descending triangle. You could see it clearly on the 15-minute chart. A descending triangle. I just went in for a reverse ABCD pattern right here. Adding more. Should have added more here at the W shape, but that would have been a bad risk. You see how it's going to the daily level, and now it's just starting to get a little bit heavier? Because people are partialing at this area. And then once it's breaking the descending triangle, I think I should have just added a little bit to the position. But yeah, now let's just go with the trade review. Yeah, it could be a reversal candidate. You need to see a reversal candle. We don't have ask on the, bid at $15, which could act as a wall. So it could just go through it. So let's see what you did there, Ivan. You traded LLY. The volume is not really great on this thing. I don't mean that the volume is low, but I don't like the volume bars. Huge spike, small, huge spike, huge spike, huge spike, huge spike. No volume right there. Huge spike, huge spike. This is ugly. Anyway, so it's going clearly parabolically to the upper side, parabolically to the upside. You are taking it to the short side, having a really tight stop loss on it for a parabolic reversal, starting to go in your favor, and you are holding it to your original stop loss. So your entry for a parabolic reversal, Ivan, this was really good. One thing I would have done, I wouldn't have held it to max loss. Why is that? it got closer to the 9 moving average in the 5-minute chart. Remember, it's not always going to go literally to the 9 moving average in the 5-minute chart. It could get closer to it, to the 9, or below it. And the best thing which you could do in this case, once you see it getting closer to the 9 moving average on the 5-minute chart, whether you made 2 hours, 3 hours, or even more than that, you need to take a partial, because this is just a scalping strategy aiming for what you could see on the pullback. Dropping down on the pullback, get something as close as possible to the 9. If it's making a bigger move, go for it. If it's not making a bigger move, just bail on the trade closer to break even. And you could see that fake breakdown. I hate when this happens. This happened on the SPY, and I knew it was going against me, but I held through that. And this happened here on ALLY. Sort of small descending triangle on the 1-minute chart, breaking down, making a new 5-minute low, squeezing back up. So in this setup, I would have exited at break even instead of holding it to max loss. If this was an extreme reversal, you would put your stop loss at the high of the week or at the most recent wave, and you would hold on to your max loss, because this is a level which it could bounce off. But in parabolic reversals, you might not want to just respect your max loss per trade. Where is YouTube? There it is. Now let's see the next trade we have there. I'll get back even to the next trade, okay, once we get through this. So B-Tank traded also a parabolic reversal on what stock? On CCL. Price extended from VWAP. It has a resistance, which is the 200 moving average on the 5-minute chart. There it is right there. Extended from the 9 moving average on the 2 and the 1-minute chart. Let's take a look at that. That's it. It's far from the 9 on the 1 and the 9 on the 2, which could be our target. Entered on a new 1-minute low. This is good candle. A little bit slippage, I think, which got you a bad entry, but the candle was definitely good. I should have waited until the 2-minute candle was closed. I don't think you should have waited for the 2-minute candle to get closed. The 1-minute candle was enough clear in this case. The exit, yes, was a little bit early. So let's take a look at the bigger time frames. We don't need the 15-minute chart. Sorry, Ivan, I missed that. I'll definitely take a look at the questions on your chart. So the 5-minute chart, it looks clearly extended from the 9 moving average on the 5-minute chart. Normally, we want to short it on the second big 5-minute candle, or better, 3 5-minute candles, if they are just average, right? In this case, the first 5-minute candle was so big, and B-Tank shorted it on the second 5-minute candle below a resistance, which is the 200 moving average on the 5-minute chart. Now let's take a look at that 2-minute chart. This candle was still not closed, but you see clearly making higher highs and higher lows. Let's take a look at the 1-minute chart. No new low, no new low, no new low, going up, 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 and the first new 1-minute low. Good entry. Stop loss would be for me up there above this week, and you could see that it actually would have got you stopped out if you used the high of the body or the high of the candle which you entered in. This was one of the best stop losses, right? If this week was a little bit bigger, this would be your stop loss. Or the high of the day, which is the safest. I would have used the previous week. Ugly, going in your favor, taking a partial. If this gave you 2 hours, but I don't think it gave you 2 hours, I would have held on to it closer to the 9 on the 2, and I see that the 9 on the 2 would have given you at least 2 hours. And you are exiting the rest at the 9 on the 5. Yes, exiting the rest at the 9 on the 5. How you got 4 hours actually? Yeah, actually, your first partial was a little bit early, but you eventually got a really good risk to reward. 4 to 1 is amazing. So good job there. Ivan, let me see your questions. Sorry about missing it. Do you pay attention to the relative volume? No, I don't really watch the relative volume at all when I'm trading, but I might start doing that. I'm just consistent without those stuff here, and as long as I'm consistent, I don't try to go deeper. But I think I need to do that because this might increase my win rate. in the future. So thank you for bringing this up. I honestly don't do that, and I can't really recommend anything regarding the relative volume, but once I start doing it and once I figure it out, I would let you know. When you say going up with no pullbacks as criteria for a parabolic reversal, how do you define pullbacks? This is it. It's just going up with no pullbacks, right? If it's going up on the 1 minute chart, then consolidating a little bit, but then going up a little bit more on the 1 minute chart, then pulling back a little bit, then going up a little bit, you see that it's not going parabolically. It's taking its time to go to the upper side. I would still take a parabolic reversal on these type of stocks if they just do pullbacks on the 1 minute chart, while the 5 minute chart are just straight up like this. Right? Let's say there were pullbacks on the 1 minute chart, but the 5 minute chart is clearly going up with no pullbacks. Once I see that, I wait for the first new low, and the longer you haven't seen pullbacks, the better it is, because the first new 1 minute low could be the pullback. Imagine you are long here or even here, and you tell yourself, I'll start taking a partial at either, for example, the daily level here, or the moment it's going to make a new 1 minute low. You will survive all this price action here until it's making a new low, where you would actually start taking your partials, because now it might start going against you, and nobody ever knows. This might not just be a simple pullback, it could just be reverse, which happens so rarely, but it still happens. Yes, exactly, IG. Just higher highs and higher lows. So INO did a parabolic reversal. Let's take a quick look at it. Yeah, reversal candle on the 2 minute chart, coming back up, and climactic volume at the low of the day. I don't like this so much because of the risk to reward. This would be my stop loss from 15 to 11. The 5 minute chart is actually good. I might have taken this thing based on the 5 minute chart. You're having a hammer on the 2 minute chart and also on the 5 minute chart. So yeah, stop loss would be somewhere at the closest wave for me. You can do that on the 2 minute chart, but still I pay more attention to the 1 minute chart. Good job catching it, Edger. Sam, let's see what you traded. Sam traded DKNG, and you traded this thing for a breakout. So this is where I usually avoid trading stocks. I wouldn't have taken this entry down here. Why is that? We just talked about that. Hello, voltage. Exactly, IG. There is a resistance above and it's stuck in a range. You're having a low, you're having a high, you're having a low, you're having a high. So basically you see strength, then it's dropping down, you're having a higher low, which is also good, right? The scary thing is now it's having a lower high. So it's weak from the upper side, strong from the bottom side. It's stuck in a range, definitely could go anywhere, right? All the moving averages are above it. But the moment it's breaking this high right here, at least now you're having the regain of the trend. You could enter before the breakout once it's breaking the 200 moving average in the 1 minute chart, because it's making now a higher high, and you had a previous higher low or sort of a W shape. This would be a good entry. Your entry was also amazing. I definitely wouldn't have taken this one, just a little bit early, and I want a little bit more confirmation to increase my win rate. The add was also good. You're adding for the breakout, and then you're partialing all the way up. You're adding one more time at 10.15, which is here. More partials up there, and I'm not sure what you did right there. You tried to add and exited and then re-entered. I wouldn't have added here to the long side if that was a long play, because it's just dropping down. And what is the end of the pullback? The end of the pullback is at least the moment it is making a new high. The moment, as long as it's making lower lows and lower highs, we are not sure if it's going to make a new high or not, because the next candle it could just make a new lower low and lower high. The moment it made a new high, and this is the least thing you could wait for, could have been your entry for a trend continuation right there. But really good job. I see that you managed it really well, and definitely the risk to reward was there. So let's see what else we had there. This was reviewed. GS traded Oxy. This is the same thing which we talked about. I wouldn't have taken it down here because of the resistance above. At least what you did is you took it after a hammer on the 5-minute chart on a new 5-minute high. That for me isn't really enough, but it's decent. It's not the worst. You don't need to wait all the time for a perfect setup. It's always better to wait for the perfect setup, but it looked well enough here. Buying pressure, higher low, new 5-minute high, and this would have been my entry at the beginning if I was looking at this thing for a long side the moment it's breaking this area. But then the risk to reward would have been a little bit messed up. My risk would have been like half of the candle. In this case, when you entered earlier, I would have done this thing. If I enter earlier and I risk it, I know that this trade is a 50-50 play. It could just simply go against me as much as it could go in my favor. And I know that this is my entry. What am I going to do? I see that it's going in my favor. I already got a good entry right there. At the beginning, my stop loss is the low. At breakouts, I move my stop loss to half of the range, because after a breakout, we either want stock to go in our favor or go pull back to the previous resistance and then continue going higher with the trend. So in this case, I'm just moving my stop loss to the half of the range in case it wicks against me. I will not have it like literally to the previous resistance. And this would allow me to double my position, and what was supposed to be 2 hours up there will be 4 hours because of the double of the position. But really good job, you caught it to the long side and then you caught parabolic reversal on this thing. Stock is going up, right? Extended from the 9 on the 5-minute chart, tweezer top, new 1-minute low, and you are partialing all the way down. ABCD pattern after that, and look at these guys. The least thing you could wait for is the new 5-minute high, taking it to the long side and partialing all the way up. Yeah, if this is a live trade, you could submit this one for the trade of the day. I love how you analyzed it. You nailed it to all the directions. Long side, parabolic reversal. Downside, ABCD pattern. Upside. Okay, not bad, not bad, not bad. Still, one day this will be live, right? Okay. So let's take a look. He's shared the trade, and let's take a look at it. He's not here. So he also traded DKNG, and as we know, he's not trading only on patterns. He's trading mainly of the time and sells and the level 2. So my analysis here, I don't see the level 2, I don't see the time and sells. It will be only based on the price action, which I see. He entered in the pre-market for the break, held on through this pullback down here, made a new 5-minute high, adding to his position. Look at these ads, adding partial, and he keeps adding. Why is this place so good to add? This is a place where what we call an accumulation phase, right? When the stock is accumulating, you don't want to get yourself long and scalp, short, scalp. On an accumulation phase, you want to accumulate your position. You take it to the long side, you make sure or try to make sure to what direction the stock is going to go, and the more confirmation he sees on the level 2 or the time and sells that the stock is going to break out, the more he adds to the position. Now look at this, the stock is starting to run up, and when the stock is going up, this is where we don't do anything. This is where we don't add to our position or enter into a position. This is where we start taking partials. It's going up, we don't chase it. This might not have been a bad ad because this is the high of the day, sort of an ascending triangle, small pullback to the previous resistance and then a breakout. So this might not have been a bad ad, but after that you just take partials, right? You don't chase trend, you don't try to force it to the long side. Pulling back, adding to his positions on the pullbacks, and then partialing all the way up to 53, pulling back. And this is what we do, guys. You don't want to enter at the highs with wide stop losses and then either losing your trade or go through this pullback, which is your stop loss, and then start partialing the moment it starts going in your favor. This would be your reward, this would be your risk. The best thing Heather is doing here is every time the stock is dropping down, he's buying it or adding to his position as close as possible to the support. This is what you want to do. You add on pullbacks as close as possible to the support, and you partial as close as possible to the resistance or to the breakouts. You add as close as possible to the support. You don't do anything here. He partialed maybe because this was a head and shoulder, or he saw something on the time and sales. I personally wouldn't have partialed here. Survive the pullback and wait for the breakout. The moment the stock starts to break out, just start partialing or bailing on the position. At what point do you decide not to chase trend? My entries are based on the 1 minute chart. I want the 5 minute chart to confirm my direction, and the best entries are on the first 5 minute high, first 5 minute candle, or the second 5 minute candle. The third is where I avoid taking a trade. This is the third. You see, this is the third. This is where I don't get into a position. If I'm already in it and my average is way down there, I would be adding on the third, maybe the fourth candle, moving my average higher and higher. But if I'm not in it, I will not be entering on a third consecutive 5 minute candle. Sorry. 1, 2, like this is the second candle, which is good for an entry. This is the first 5 minute candle, which is good for an entry. This is the second 5 minute candle, which is good for an entry. This is the third 5 minute candle where I'm not entering into a trade. This is where I'm going to be adding, right? Adding. Now this is decent. ABCD pattern, right? After pullback, you could enter. W shape, you could enter, right? But you don't want to enter on the way up on a third candle. You could enter on the second candle if you see a setup on the 1 minute chart. But you don't enter on the second candle if it's doing like, I don't know, the seventh higher high 1 minute candle. You might tell yourself, okay, this is the second 5 minute candle and it's still decent to get into the second 5 minute candle. But this would be your risk. This is too much down there. You might want to enter on the second 5 minute candle if it did something like this. Going up, pulling back. This is the first 5 minute candle. This is the wick up here. Then this is the second one. It's coming back up. And this is your entry, right? This is the second 5 minute candle. You are getting your entry. And you're putting your stop loss in the middle based on the level where it bounced off on the 1 minute chart. I'm not sure what he means by squash match, but maybe he saw something on the level 2 or high prints, because usually his ads and his last exits are based on huge prints on the time and sales. Where was that? 54, right? Let's take a look at that here. Yeah, I actually shorted it at 54. I also did that right here. That's closer where he exited. I saw this big print closer to 54. So I took it to the long side here for an ABCD pattern. Breaking up, adding at the breakout, partialing all the way up. And the moment it broke there, the time and sell started flushing. Big print started coming in. It came back down. I didn't even wait for a new 1 minute low. I took it for a parabolic reversal. Fourth consecutive or fifth consecutive 5 minute candle, taking it to the short side, and that was his last exit, and then he just partialed all the way down. I actually would have held on to this thing to the short side, but there was one thing I did bad. I wanted to partial, and instead of partialing, I added to my position, which ruined my average. My average became down here. I added really big into this position, half of what I had right there, which caused me to just quickly bail on the trade. Other than that, I would have held on to this thing for a little bigger move right there. So let's take a look at what Ralam did right there. And then we'll take a look at one more trade for everyone. Ralam traded Oxy and you traded to the... This is not bad, Ralam. And this is what where I was actually biased to the short side on stock. The stock is below VWAP. It's below the moving averages. And you see these wicks right here. Selling pressure wick. It's getting closer to the 9 moving average in the 5 minute chart. Bouncing out of it. Making a new 1 minute low. Taking it to the short side. Having a really technical stop loss, which is the high right there. But unfortunately, it's just going against you. This is not a bad trade. This is totally fine trade, which unfortunately just went against you. Heather is amazing at what he's doing. You don't need to use if only time and cells and level 2 volume working for you, you don't need to use patterns, but definitely the overall direction or a little bit of studying in advance would be important, right? You want to know where that huge bid or that huge ask might be going to. Is it to the long side or is it to the short side? And you would do that by studying the previous time frames, the overall direction of the stock. You don't want to be on the wrong position, right? Accumulating this position to the short side when it's breaking up to the upside. I don't know, Charlie. So I'll let Andrew know about that. Hierarchizer. So let's take a look at second trade Ivan shared with us. There is nothing called secrets in day trading. That's just in my opinion. We all trade price action. We trade, some of us trading volume, some of us trading patterns, right? And whatever works for you or works for me, I just share it, right? The hard part is not knowing the strategy well. The hard part is being patient and waiting for this strategy to be formed and then executing them. A lot of traders are just getting chopped out earlier on the day, getting to max loss on not good setups, and then catching the good setup, decreasing their loss for the day and ending up the day red. If you are good with your patience, if you're enough patient and you wait for the exact setup, you have rules for the setup, right? Just wait for them. Once they are there, execute the trade. You don't want to be chopped on non-setup stuff, getting yourself to max loss. So knowing the strategy or knowing what Heather is doing, knowing what Thor is doing, knowing what Andrew is doing is not going to make anyone a consistent trader. It's your psychology which is going to make you consistent or not. Definitely reading the price action, knowing the strategy is important, and this comes with time. But I don't think it takes a lot of time to know that. Maybe a year, 6 months, 8 months, especially if you're trading one setup, 6 months to 8 months would be enough to figure out your strategy in detail. That's all the thing you need, but it takes years and years to work on your psychology. Somnia, yes, it is, Samina, sorry. Those reviews are saved on YouTube. DKNG Ivan. Now this is the place where I added to my trade. So I took this thing also to the long side for the ABCD pattern. You see ABCD pattern, parabolic pullback, wait for a W shape, type 3 ABCD pattern, getting into the long side, adding for the breakout and then partialing all the way up. You took it for the break immediately with a stop loss new 1 minute low, and that's also not bad. Taking it for the break with 1 minute stop loss and then exiting all out at 2 to 1, I guess, Ivan? Or that was 3 to 1. I can't really tell. 53.30, 53.10, that's 20 cents stop loss, and you exited all at 80. Yeah, that's 2 to 1. Good job. No, that's actually really nice that you were not really greedy about this. And JKNG, if you look at the daily chart, guys, I'll let you know why Ivan actually did a really good job right there. Look at the daily chart. You see that this is today's candle, and he took it to the long side at somewhere around 53.30. This is where he took it to the long side, 53.30. You see how much it moved today? This is how much it moved today. And if you look at the average true range, only this day it moved a lot, but on average it's making this move a little bit smaller maybe. So you can't get into a trend trade right there for an ABCD pattern and hope that it's going to make $2 or $3 more. It already did a huge move. So getting 2 hours out of it, 1 hour out of it is more than enough. Exactly, Lou. It was already extended and you don't know how much it's going to move after the breakout. You don't want to hold this thing into a trend trade. If you are seeing the same setup around this area, you see that the average true range is somewhere around $3 to $4, but today it moved only $2. You could get into a trend trade and hold it for a big move, $1, $2, $3. You are getting an early entry somewhere down here. Getting in way up there means that the move was already done and you don't want to hold into a trend, just bail on it earlier. B-Tank, let's see your FedEx trade. I actually did a recap on that, the average true range, the importance of the average true range in trend trades. I did it yesterday, before yesterday. So you guys can watch that recap. I think it's pretty helpful, and it helped me a lot with my trend trades. It just lets you know how much you could hold on to your trade before you bail on it, or how much you could aim for. Sometimes we are having that question of when should I take my exit all out, at 2 hours, at 3 hours, at 4 hours, at 5 hours. This depends on how early you went into a trade. If you are getting in so early at the beginning of the move and you see clear trend to the upside, you could aim for 5 hours, 6 hours, 4 hours. But if you are getting in a little bit late, when the average true range is already made or gone, you want to just aim for a smaller move, 1 hour or 2 hours. So B-Tank traded FedEx, and I guess this was yesterday. You traded this thing. Was this long or short, B-Tank? Where is the 1 minute chart? That is the 1 minute chart. I'm not really sure if this was a long or a short. I assume this was a long because of the green arrows. It was a long. But why did he bail on it? I mean, it didn't even make a new 1 minute low, right? So I can't really tell about this entry. He wasn't the only one who got this entry. I saw a couple of members more who took the same entry right there, and I base that was maybe on the time and sales or something on the level 2. I saw 2 people getting into the long side somewhere up there. Now, if you are getting into the long side this early, you definitely don't want to have your stop loss at the same place, just at least closer to the low of the day. This is unfortunately was a missed move right there. I can't really just review this trade, but the only thing which I could say is that the stop loss should be a little bit wider, unless that was a hotkey mistake, or maybe he got nervous when it went in his favor and then started getting closer to the low of the day. Red candles, sometimes they're scaring us, but you don't need to get scared of red candles. You're having your plan, you know what's your stop loss, you know that the candle is still not closed, and you don't know how it's going to get closed. It could look like a reverse hammer or a shooting star which is trying to break down and then end up closing like a hammer. So as long as the candle didn't get closed, don't worry about it. If the candle gets closed somewhere down here and then the next candle is getting lower, in this case you might want to just bail on it. But don't bail on the very same candle to which you are entering. Yeah, I could do that. So basically, the average true range on the daily chart is telling you how much the stock can move intraday on average, right? To figure out the average true range, you could do 2 things. The easiest thing, and which I'm usually doing, is looking at the daily candles and look how much it's making a move per day. Today it's $5, yesterday it's somewhere around $3, before that it's somewhere around $2.50, before that $9, $3, $3, and on average I could just say that it moves somewhere around $3 or $4. The second way to do this is right click here, chart area, add new area before, right click, study config, average true range, add it, maximize it, zoom it out, check the last week or 2 weeks and go for the half of it. Don't go way back there when it was accumulating, when it wasn't in play. This is the place where it started moving. I'll go with this place right there. This is the place where it started getting volume, and I will go for half, 3.2. So $3.2 is what I could aim realistically on this stock. It could make more than that, it could be less than that, but 3.2 is what I could aim for. If it's opening up at the first minute for an open range breakout and it's making $2 or $3 move on the very first candle, I wouldn't take it to the long side for an open range breakout because it already did the average true range, right? Now let's say it didn't open up that strong and it opened up just chopping around in a range right here. You see that today it opened at this price, 49. It's chopping between 49 and 50.50, which is $1.5. Now you're taking it for the break after $1.5 move, and you know that this thing could move $3.2, $3.5. So basically you're having $1.5 move in your favor. You're taking it to the long side here. You're putting your stop loss at the half of the range because you're getting in for a breakout, 50 cents stop loss. And since you know that it could make at least $1.5 move on average, you would hold it all the way to 52.50. That's it. Your 3 hours. You could hold it for more because it did way more than that today, right? But the average is there, like 52.50. This is what you could just calmly hold onto it without being nervous. It's making an average of $3 move, so on a trend it could just easily get to 52.50. So any other question, guys? Daniel, IBM is relatively strong. Let's take a look at IBM. Yeah, IBM, I'm not really sure where it's going to go. Choppy on the daily chart, it's looking weak to me. I think it might just drop down. This looks like a reverse candle right there. If it's breaking this area, it will just sink down, at least to this pivot point, and then this pivot point down there. You're welcome. I find when stocks are breaking out, they can make multiple average to the range. They could do that, especially at all-time highs, by the way. Look at this. DKNG today, it broke the all-time high. And if the stock is breaking all-time high, you definitely don't want to just stick to the average true range, because if stock is breaking all-time high, there is literally no resistance above it, and you could expect double average true range, at least more than the average true range. Stocks at all-time high, they tend to run. This is when it broke the all-time high by that moment. No, it's not there. Yeah, it was actually that day. It's breaking all-time high somewhere around this area, and it's just making $2 or $3 more. So when the stocks are breaking all-time highs, they could run easily. IBM. Any other questions, guys? Yeah, Daniel, for now it's looking like it's holding, but overall the pattern, I don't like it. If you look at it overall, you're having a high, you're having a low, you're having a high, which is a lower high, and this is the low. If it's breaking down, it might continue just making lower lows and lower highs and drop down. If it's making a higher low, this doesn't mean that the stock is weak, strong, I mean. It needs also to break this area. The moment it's breaking above this area, making a higher low and a higher high, this is where I'm going to be interested in it. I would either enter there, or I would enter on the next leg up. But in this area, for now at least, I'm just a little bit short bias on it, and I can't really tell what it's going to do. No, Hamza, I'm not trading options. Not yet. Siri, you could do that if you have a clear setup, but when the stock is trading in a range, this is difficult to do. Let's say you're shorting it here. Now it's making a new high and you're taking it to the long side. And let's say you shorted it at first there, but now you see that it's bouncing with the previous day close and you're taking it to the long side. You're just paying commissions or exiting 0.2, 0.2, 0.2 Rs, losers, with 0.2 commissions on each one. Right, so basically you'll be losing a lot in this case. Just read the overall pattern and go with the trend. In this case, I would be a little bit short biased on it. But the moment it's breaking this area right here, if it's breaking it, that's where I'm going to be a long bias on it a little bit. But what I would prefer to see is a pullback after the breakout. Hey man, when you take a trade, did you follow the level 2 or you are focused on 100% on charts? I'm focused on charts most of the time. Adrian. Yeah, it's basically the same thing which an IO did here, or INO. Let me take a look at my INO trade. Oh my god, this thing dropped a lot. So you see, just go in with the trend. It looked like it was holding this, right? So some might say that this is forming a double bottom here. Why not taking it to the long side here? I simply didn't take it to the long side because it's dropping down, pulling back, dropping down, pulling back, right? Dropping down, going back up. So we're simply having lower highs. This is the first high, but we still don't have lower high. See, taking it to the short side, and then it's just breaking down. It went all the way up closer to the breakout, but it just didn't do that. And I'm not sure if IBM is going to do that. It could work out. I'm not saying that it's going to fail, but for now, I would just wait for it. Better to the short below this area, better to the long side above that area. We'll see what it's going to do eventually. So yeah, that's it, guys. What made you decide to keep trading after you get chopped up by AMD? I knew that I got chopped up by AMD because of my psychology. I traded bad, and I knew that I could do better if I am patient waiting for the setups. I didn't hit my max loss. I was down 2 hours by that moment. So I just decided to be more patient eventually, and I caught really good trades. Apple, DKNG to the long side and to the short side. NVAX to the short side, should have held on more. INO to the short side, this was a loser, and then to the short side. Basically, I know that I could get myself out of a hole as long as the market is giving me good setups and as long as I'm patient waiting for those setups. You explained. Thank you, Chicago. Yeah, the most difficult part is doing that. I have max loss, which is 3 hours to 4 hours per day. This is looking better now, by the way. You're having, you see this now? At least now you're having a higher low. Having a higher low doesn't mean that the stock is going to go up, but this is the first sign of strength. The moment it's breaking the high, that will be it. I have 3 or 4 hours max loss per day. My goal though is open, depending on my psychology. I could go for up to 20 hours and I could just exit at 4 hours, and if I just don't find anything, I could exit at less than max loss or less than the daily goal. Alright guys on YouTube, if you have any questions, thank you for sticking with us, by the way. This is my email, feel free to email me and I'm always happy to help. Guys, here, same thing, if you have any questions, I'll be in the chat room, you can mention me or email me, eminentbillbulltraders.com. Have a good day, respect your rules, don't overtrade, and bye bye.